Hey investors, it's Jim Cramer here. Staying ahead in the financial markets is crucial. One of the most important things to keep your eye on is economic data. Think of it like the scouting report on your investment competition. We're going to break down the most important economic events of the week and help you understand what they mean for your portfolio. Fasten your seatbelts because this week is jam-packed with market-moving economic reports from around the globe. We've got everything from inflation data to central bank announcements, and it's all going to influence how the markets move. We'll be taking a close look at key indicators like inflation, interest rates, and manufacturing data. By staying informed about the forces shaping the global economy, you can make smarter decisions and protect your hard-earned money. So, let's dive in and see what this week has in store. Alright folks, let's kick things off with a look at the early birds in the global economy, New Zealand and Japan. Bright and early Monday morning we're getting the BusinessNZ Services Index out of New Zealand. This one gives us a read on the health of their service sector, which is a big deal for their economy. Meanwhile, over in Japan we're watching for their core machinery orders data. This is a key indicator of business investment and can give us some clues about the future of Japan's manufacturing sector. A strong report would be a positive sign for the Japanese yen, so keep those trading screens locked on Japan. Shifting gears to the US, get ready for some Fed speak. FOMC member Waller is stepping up to the mic. Now, whenever a Fed official talks, Wall Street listens. Is Waller feeling hawkish, hinting at more rate hikes to combat inflation? Or is he striking a more dovish tone suggesting the Fed might ease up on the brakes? But that's not all from the US on Monday. Later in the afternoon we get the latest reading on the CB leading index. This one's a big deal for gauging the overall health of the US economy, so mark your calendars. And there you have it. Monday is setting the stage for what's sure to be an action-packed week in the financial markets. Keep your eyes peeled for any surprises, because in the world of finance, anything can happen. Don't touch that dial, folks. We'll be back tomorrow to break down Tuesday's economic calendar, and trust me, it's another doozy. Good morning, investors. It's Tuesday and we're kicking things off down under with a double dose of market-moving news from New Zealand and China. First up, we're getting New Zealand's trade balance figures. A strong trade surplus could give the New Zealand dollar a boost. Meanwhile, over in China, all eyes are on the People's Bank of China, PBOC, as they announce their latest interest rate decisions. Most analysts are expecting the PBOC to hold rates steady this time around. Their words could move markets, folks, so pay close attention. Now let's hop over to the Eurozone, where we've got a critical inflation checkup on deck. Germany, the economic powerhouse of Europe, is releasing both its preliminary producer price index, PPI, and its final consumer price index, CPI. These numbers tell us how fast prices are rising for producers and consumers, and they're a big deal for the European Central Bank, ECB. If they come in hotter than expected, they can fuel expectations for more aggressive interest rate hikes from the ECB. But if inflation is showing signs of cooling off, it might take some pressure off the ECB. These inflation figures will give us valuable tools about the overall health of the global economy and the direction of ECB policy. Alright, let's cross the Atlantic now and check in on our neighbors to the north. Canada's releasing its latest inflation figures, and these numbers could have a big impact on the Canadian dollar. We're getting both the headline Consumer Price Index, CPI, and the less volatile core CPI. Economists are expecting to see a bit of a slowdown in Canadian inflation, but the big question is, how much of a slowdown? A significant drop could ease pressure on the Bank of Canada, BOC, to continue raising interest rates. Canada's also releasing its New Housing Price Index, NHPI, which tracks changes in new home prices. A bigger than expected drop in the NHPI could fuel concerns about a housing market slowdown. Morning investors, it's hump day and we're kicking things off in Asia with a look at Japan's trade balance figures. Now, Japan's a global trade powerhouse, known for its cars, electronics, and high-tech gadgets. Economists are expecting to see an improvement in Japan's trade balance. A strong reading would be a positive sign for the Japanese yen. But here's the catch: global economic growth has been a bit shaky lately. If Japan's trade surplus disappoints, it could signal weakness in key export markets. Now, let's shift gears and head back across the Pacific to North America, where we've got a data deluge on our hands. Canada and the US are both releasing a slew of economic reports, covering everything from housing to manufacturing. First up, from Canada, we're getting building permits data. This report tells us how many new construction projects have been approved, giving us a glimpse into the future of the Canadian housing market. Meanwhile, down in the US, we're getting a double dose of manufacturing data with the Market Manufacturing PMI and the ISM Manufacturing PMI. These reports give us a read on the health of the US manufacturing sector. A weaker than expected report could raise concerns about a potential slowdown in the US economy. And finally, folks, the main event. Get ready for the release of the Federal Reserve's minutes from their latest monetary policy meeting. These minutes are like a behind-the-scenes look at the Fed's decision-making process. They give us valuable clues about the central bank's thinking on interest rates, inflation, and the overall health of the US economy. The minutes will be combed through for any hints about the Fed's future policy moves. A hawkish tone could signal that the Fed's not done raising rates just yet, but a more dovish tone could ease some of those fears and potentially give the markets a boost. Good morning, investors. It's Thursday and we're kicking things off with a global manufacturing checkup. Get ready for a wave of Purchasing Managers Index, PMI, data from around the world. First up, we've got Australia's manufacturing PMI. A strong reading would be a positive sign for the Aussie dollar and could give a boost to commodity prices. Next up, we're hopping over to Japan for their latest manufacturing PMI figures. A strong reading would suggest continued expansion in their manufacturing sector. And we're not done yet. We've also got manufacturing PMIs coming out of France, Germany, and the UK. Now, shift gears and get ready for a deep dive into the mind of the European Central Bank, ECB. They're releasing the accounts of their latest monetary policy meeting. Market watchers will be laser-focused on any hints about the ECB's future policy moves. Are they planning to continue raising rates aggressively, or are they considering hitting the pause button soon? It's all about reading between the lines, folks, so pay close attention to those ECB minutes. All right, let's head back across the Atlantic now and check in on the US economy. Get ready for a double dose of data that will give us valuable insights into the health of the American consumer existing home sales and consumer confidence. First up, we're getting the latest existing home sales figures. Now, the housing market's been a bit of a roller coaster lately. After a long boom, rising interest rates have started to cool things down. But the big question is, how much have higher rates impacted demand? A stronger than expected existing home sales report would suggest that the housing market is still holding up relatively well, even in the face of higher borrowing costs. That could ease concerns about a sharp slowdown in the housing market, which is a key driver of the US economy. But if sales disappoint, it could fuel fears that the housing market is headed for a more significant correction, which could have broader implications for the US economy. But hold on, we're not done yet. We've also got the latest consumer confidence data coming out. This report gives us a read on how optimistic or pessimistic American consumers are feeling about the economy. And let me tell you, consumer confidence is a big deal. Consumer spending makes up a huge chunk of the US economy. So when consumers are feeling good, they spend more, which is good for businesses and the overall economy. G'day investors, it's Friday and we're wrapping up the week with a final round of market-moving data releases. We're kicking things off down under with a look at New Zealand's retail sales figures. Now, retail sales are a key gauge of consumer spending, which is a major driver of economic growth. A strong reading would suggest that Kiwi consumers are still opening their wallets, despite rising interest rates and inflation. That would be a positive sign for the New Zealand economy and could give the Kiwi dollar a boost. But if retail sales disappoint, it could signal that consumers are starting to tighten their belts, which could weigh on the New Zealand economy and the Kiwi dollar. Keep in mind that New Zealand's economy is heavily reliant on consumer spending. So, these retail sales figures will give us valuable clues about the overall health of the New Zealand economy. A strong showing would be a welcome sign for policymakers, while a weak report could raise concerns about a potential economic slowdown. Stay tuned! Let's hop across the pond now and check in on the UK consumer. We're getting the latest UK consumer confidence data, and all eyes will be on this report to see how consumers are feeling in the face of some tough economic headwinds. Remember, the UK's been grappling with high inflation, rising interest rates, and the ongoing uncertainty surrounding Brexit. A strong consumer confidence reading would suggest that Brits are still feeling optimistic about the economy, despite the challenges. That would be a positive sign for UK businesses and could support the pound. But if consumer confidence takes a hit, it could signal that consumers are becoming more cautious about spending, which could weigh on the UK economy and the pound. Remember, consumer spending is a major driver of economic growth in the UK. So these consumer confidence figures will be closely watched by policymakers and investors alike. A strong showing would provide some much-needed reassurance about the health of the UK economy, while a weak report could raise concerns about a potential slowdown. Stay tuned. Alright folks, get ready for the grand finale. We're wrapping up the week with a double dose of market-moving news from the U.S. new home sales data and a speech by none other than Federal Reserve Chair Jerome Powell. First up, we're getting the latest new home sales figures. Now, the housing market's been a bit sensitive lately, with rising interest rates cooling down demand after a long boom. A strong new home sales report would suggest that the housing market is still chugging along despite those higher borrowing costs. That would be a positive sign for the U.S. economy, as housing construction and spending have a ripple effect across various sectors. But if new home sales disappoint, it could signal that higher rates are starting to bite, which could raise concerns about a potential slowdown in the housing market and the broader economy. But hold on to your hats, folks, because the main event is still to come. Fed Chair Jerome Powell is stepping up to the mic, and you know what that means. Wall Street will be hanging on his every word. Remember, the Fed's been raising interest rates aggressively to combat inflation, and investors are eager to hear any clues about the future path of monetary policy. Is the Fed planning to continue raising rates, or are they getting ready to hit the pause button? Powell's speech could send shockwaves through the markets, so get ready for some potential volatility. There you have it, folks. Another week, another whirlwind of economic data and central bank chatter. Remember, staying ahead of the curve in the financial markets is like playing a high-stakes game of chess. You need to anticipate your opponent's moves and strategize accordingly. By keeping a close eye on these economic indicators, you can gain valuable insights into the forces shaping the global economy and make more informed investment decisions. This week has been a wild ride, from inflation data in Europe to central bank pronouncements in the US. We've seen how these economic events can send ripples across the markets, impacting everything from currency valuations to stock prices. But remember, knowledge is power. By staying informed and understanding the forces at play, you can navigate the markets with confidence and potentially come out ahead. Don't forget, the markets never sleep. Next week, we'll bring a whole new set of challenges and opportunities. So stay tuned for more market insights, analysis, and expert commentary. And remember, whether you're a seasoned investor or just starting out, staying informed is the key to success in the ever-changing world of finance. That's all from me this week, folks. Remember to do your own research, manage your risk, and invest wisely. And most importantly, don't forget to have fun out there.